Ladies and gentlemen, hello and welcome. And welcome to this chat, Mr. Vasudevan. Um, I think most of us have worked with Mr. Vasudevan in some capacity or the other as a part of the fintech industry. But just to give you a quick introduction, Mr. Vasudevan is the executive director of multiple departments within the RBI, including currency management, corporate strategy and budgets, and enforcement. And in his earlier role, until a few months ago, was also heading the Department of Payments and Settlement. So for this topic today, which is about exploring symbiotic relationship between currency and payments, given your background, sir, in currency management, payments, and of course your long history at the RBI, I don't think we could have had a better speaker. So I'm going to throw some questions at you. But having known you for some time, I'm sure you're going to throw some questions back at us. So we are, as I was just telling you, like the wicketkeeper signals that he's going to throw googly. So just give us a flag so we can play with that. So I want to just start out with a show of hands. I want to just get the audience a little warmed up. So folks, show of hands. You can just raise your hand. How many of you, no, I'll ask you the question and then you can raise your hand. How many of you today use digital payment apps? Okay. How many of you are carrying physical cash in your pocket right now? Excellent. And how many of you guys are carrying digital cash in your pocket right now, a CBDC app? Okay. And so each of us is a user of digital payments on a daily basis. We are using cash, physical cash on a daily basis, and some of us have started playing around with the digital payment app as well. I think sitting from your vantage point, Mr. Vasudevan, how do you see these different worlds? One is the physical versus the digital, other is currency versus payments. It'll be good to hear your thoughts to set the stage on how should we be thinking about this broad area.
Thank you, Mahendraji. It's always nice to be back on stage with the FinTech fraternity. And it's also a pleasure to be part of such a mega event, massively organized and well attended as well. If you look at the different types of payment modes available, let me take currency also as one payment mode and the digital payment instruments available. If you see, they have served different purposes at different points in time. Let's take during COVID itself. If at all one thing that was positive, COVID was positive on both the paper modes of currency plus also the digital modes of payment. Both are different purposes to serve. The paper modes of currency, the physical currency, what we call, took care of the store of value feature of any requirement of an individual. But for the transaction purposes, since mobility was restricted, there were issues in reaching out. So typically the digital payments came into play. So if you look at it, even during the earlier crises, for example, the global financial crisis, there was a crisis of confidence. People moved back to physical currency, maybe out of banks. During the Y2K, if you see, then there were people not having comfort with the digital modes. People went back to physical modes. Recently, during COVID, we have seen a bit of both as well. And if you see, like the GFF itself is a festival, and during the ensuing festival season that's going to happen, be it the Dasara, be it the Deepavali, you are going to see a mix of both. Incidentally, just a little while before, I had a request from one of the persons I know that he wanted a fresh note packet of 10 rupees. So I was wondering why is he asking for a fresh note packet of 10 rupees. Then very clearly he said that my niece is getting married, so we have to put a garland of 10 rupee notes. So that was one of the use cases he had. And during the festival times, we do get requests from many of the banks and many of the agencies as well, saying that please give us fresh notes because that's in great demand at the temples as well. So different purposes get served. And as we see the show of hands, most people raise their hands when you ask them about the digital apps. This is typically Mumbai, maybe typically Jio. But if you go elsewhere, maybe it could be a 50% as well, where people are carrying cash. But one of the things that you should also appreciate is that the need for a wallet is becoming different now. Earlier, we used to keep a wallet to also store cards, be it debit, credit, prepaid, whatever. Now, once tokenization has happened, you don't have the need to carry cards at all. And tokenization has been a mega success. If you see the enormity in terms of the conversion factor from physical to the electronic ones, you can just carry your mobile and then that has the cards as well. So the need for a wallet is becoming diminished. And so also now people are carrying cash. Some people are using CBDCs. Maybe a little ahead going forward, you will see that the mobile carries the money as well, mobile carries the card as well. Probably you can keep the wallet at home and you can still continue your life as it was. So it's a different story that gets told as we move in time. For example, sometime earlier we always used to say cash is king. Later I was using the phrase called digital is divine. Now tomorrow when CBDC is going to come, it is combining both the physical features of cash plus the advantages of a digital payment. You can give it whatever name you want. Nirvana, Elixir, whatever you call. So that's how things are going to change and we have to be ready for this change. And sometimes when you see, maybe this generation is more passionate about cash. Maybe if there is a generational shift, if we exit and the younger generation comes in, probably there may be a bigger demand for digital. But each one serves its purpose. I always believe in one thing that cash and digital are the BCP for each other. If you were to do a cash transaction, you will have to ensure that cash is available at every pocket, at every geography. But if digital is available, probably we may have less recourse or less need to cash and less demand and movement of cash to those pockets as well. Similarly, if you are using, say, UPI, I am just taking UPI because in every room, every floor, everywhere, UPI is being talked. I'm just saying UPI, while you make a payment to a taxi driver at the point of exit, and if there is a network failure, you may wait for 1 or 2 minutes and there's a message also that comes saying that please don't try again because there should be some network issues, please don't try and make a payment again. Automatically you go back to your pocket to see if cash is there. And when the volumes are increasing, 10.58 billion was this month's, last month's figure, so per day figure being 35 crore plus. Just imagine for a split second there's a connectivity failure, not just at the system level but at the bank's level as well. Probably you may have to have that urge to go to cash. So those are the challenges that are there and elsewhere if you go, connectivity is an issue, new solutions are being looked at, so cash becomes a requirement. So there are challenges. So sitting at this point, I see that as of now, both are coexisting and both will probably need to coexist for some period of time. The variations may be coming in form of how much is digital, how much is physical, but at this point we will see the need for both to coexist. I hope I have answered some of your points.
Absolutely. I think I'm taking 2-3 messages away, right? I think one is it will be a fallacy if the people in this room sitting here in BKC in Bandra think this is India. I think, like you said, like if you go out to a tier 2, tier 3 city, you might find a 50% coverage of customers who are just cash, just digital payments. I think the second thing is the couple of use cases you touched on, the as cash, physical cash as a backup currency just in case there is a system failure, or the use case of the garland. I think there are needs, whether those are functional needs or psychological needs that consumers have that will necessitate the need of cash. I mean, if I just reflect on my own example, for me, the seamless journey or the symbiosis, if you want to call it that, is I would previously go to the ATM perhaps once a week to withdraw money and then use it to make my payments. Over the last 3-4 years, I've not felt the need for it, and it's all moved to UPI. By the way, I think as you're speaking, I think for the next GFF, we should give NPCI the idea of digital garlands over UPI. And then we can share that. We'll get to CBDC in a little bit, but I want to explore this dimension a little bit more with you. We are all too familiar with consumer use cases from a cash versus digital payment perspective. But particularly in your role now as from a currency management perspective, I think taking cash to the deep reaches of the country must have its own challenges. Could you educate us a little bit about cash management and what it involves? I think it'll be good for us to learn as an overall industry.
Cash management has been one of the basic expectations of the central bank, and if you see over a period of time, we did talk about, for example, in the case of UPI, there are 350 million users and 52 million merchants accepting. If you see cash probably is accepted by everyone. So we have a reach of say 1.1 or 1.2 billion, whatever you say, that reach is there. And geography-wise also, it is available at all nooks, corners, at all points in time. So cash management has been a very intense activity. And typically, cash management has been like from the printing presses to the Reserve Bank issue offices to the currency chest. Sometimes we also have, of late, we also have been doing direct remittances from the printing presses to the currency chest directly. And from the currency chest they go to the bank branches, to the ATMs, and to every such outlet. Similarly, if you see this is the movement of fresh notes from the presses to the branches. Similarly, for disposal, we have a reverse journey that comes from the branches to the chest, to the issue offices, and then gets destroyed. So it's a huge journey. And typically, I'm saying in a year, hundreds and thousands of shipments happen of currency. And over a period of time, as I said, there has been a good acceptance. We recently did a survey as well about the cash acceptance and cash in terms of its availability. And like it was a mega all India survey, and 87% of the merchants said that they get cash in the denomination they want at any point in time. And 83% of the people said that we also get cash when we want. So that way the cash reach has been there. But it is possible to actually bring in efficiency. It is possible to make these movements much more ergonomic, economic, and a good experience as well. Like for example, QR codes until recently were an alien animal or an alien feature. We are now very comfortable. Whenever we see a QR code, we get the urge to scan. From QR code to scan and pay to QR code to scan and eat in a restaurant. Now people have done away with the menus. And to QR code to scan and sightsee as well. If you go to a place, you just see the QR code, you scan, you get everything about the thing you are going to see. So QR codes have become all pervading. Similarly, it is possible for us to also use that, say, in the movement of currency treasure. We can have QR codes which can tell us what the box contains. And also we can have boxes that are well designed to move, to stack, to actually reuse, avoid maybe some of the hazards of, say, plastic and other things. There are plenty of things that can be done. And who better than Amazon to tell us how to move goods from one place in the country, in the city, in a geography to another country, another geography. So we could learn actually. And some of those things, like for example, we are saying about just-in-time management. We also need to ensure that currency is available. Currency is a very confidence-boosting measure that is always required when somebody requires it should be available. Otherwise, there can be crisis of confidence. So to see that the just-in-time management works well, probably we could use some of the innovations that fintechs do to see how best we can. So typically, if you see, the currency management has been a bank-led model. Just like the payments were until some time a bank-led model. Even now, payments are a bank-led model if you are looking at movement from one bank account to another. But at the front end or at the back end, there are fintechs that have innovated, and you have a good share of these TIP apps and other apps that have come in to take place. Similarly, we could look at going forward, if some good ideas come, how we can actually move from some of these bank-led features in currency management as well to be a little more collaborative and participative from the non-bank side as well. See, ultimately, if you see, the liquidity management, the cash management is a very integral part of any efficiency that needs to be brought in. Many of the banks have actually started their cash management practices, and they have leveraged that to become very good players in payment systems as well. I know many of the banks have done like that. It is also possible for some of the good players who have ideas to come in and say that this is how we can also partner in maybe in movement of currency, in movement of managing the treasure, and all those things. No, it might be very useful to see, because we are conscious of the fact that innovations can come in. See, the confidence and trust people have in banks, vis-a-vis the comfort and innovation that fintechs bring in, there could be a good marriage of the two to take the things forward. I feel this is one of the outcomes of a symbiotic relationship that we could have. Symbiotic relationships need not be toxic. It can always be convenient, comfortable, and useful as well.
No, I think that's a very powerful thought. And I think as you were speaking, and you just touched upon it, but the three I's that I've been reading in the RBI vision documents consistently around, from inclusion to internationalization, and with innovation being the arc that gets us there, I had until now not thought about cash as an area for innovation. I've always thought about it as an axis for inclusion. But I think as you were speaking about it and what it takes to move cash, at a lower possible cost, at less impact to the environment, is an area of innovation that all of us could think about. And as you were touching on some of the logistic aspects of it, I mean, I thought I was sitting in how do we move goods from one fulfillment center to the other. Um, and so I think there is a deep area or deep possibility of innovation on movement of cash and management of cash in particular. I think you touched upon liquidity, and I wanted to explore that a little bit more. We talked about consumers, we talked about a central bank view from a cash and currency perspective. When you think about small businesses, and payments is one aspect, but when it comes to currency and cash, a lot of small businesses rely on liquidity. Uh, what's your thought on how can these worlds coexist from a small business perspective who today are perhaps earning in cash, they're dealing with their vendors in cash? How can the digital and the physical world coexist for them?
It's an interesting question. Actually, if you see the need for cash typically is there everywhere. It is possible for us to look at new ideas. When we talked about ATMs, for instance, we were talking about cash dispensation. Now, subsequently, we are seeing the popularity of cash recyclers, where the cash gets used by them and then recycled back into the system. So we can avoid the movement of this back to the ecosystem where I said about disposal, other things take predominance. Similarly, it is also possible. I was actually a little amused or like felt a little different when I saw UPI ATM. So I was just outside seeing that UPI can also have an ATM because UPI is fully digital, and then you have an ATM that takes care of the cash withdrawal part. It is also possible for us to look at the ATMs. See, we have had white label ATMs in the normal cash dispensation part, and they have had a good share in terms of the number of ATMs prevalent. And they've also been able to do certain things which are innovative. So it is also possible for us going forward. You say that the ATMs can be customized to meet some of the requirements of a small business. You could have a hand-held ATM, or you could have a tabletop ATM, which actually takes the currency from the inflows that have come to the shop or to the outlet, and that can be loaded into the ATMs, and it can be dispensed to people like us in case we want. Of course, there can be an element of compensation, there can be an element of pricing involved. That could be talked about as well. It need not be an ATM that is now presently available in an AC atmosphere with a lot of security, etc. It could be within a premise of the shop as well. So it is necessary for the shopkeeper to also say, convert the cash that he has got into some other use cases. It is also possible for him to rely less on banks for taking the money away, or less for him to go to the bank and load the cash in his account, etc. There are multiple options available where he can use the ATMs, the infrastructure in terms of technology for people to draw cash, for people to do many things. We have tried to, for example, remove the friction between the cash and the digital part. When we announced this cash at pause, for instance, cash at pause we announced because we thought that will be a confidence boosting measure. When somebody wants, he always knows that cash is available. So definitely he will not have to keep cash in his pocket, he can withdraw. But if you see over a period of time, the cash usage at pause has significantly dropped. People are not seeing the need for cash. They know that cash is available. I am saying the average value of a transaction being around 1,000 rupees. But if you see UPI, in fact, it is becoming significant in terms of volume, but the value per transaction is typically stagnant, 1,700, 1,600 rupees per transaction. So UPI, still for large use cases, can have maybe some more innovations coming in. Of course, credit and other things are being looked at, but there is possibility that we can look at liquidity, cash management, this level of currency that is available that can be recycled better, used better. All those things could be one area where we can look at innovations to come from. I am confident that the fintechs can also have a role in that. Yesterday, I was actually listening to one of the sessions where one of the participants said that we're interested in finding some innovation for tracking unclaimed deposits. Similarly, we could have some of those thoughts coming in here as well. So the industry is out here. They can actually help us, help yourselves in the process.
No, I think it's again, like, I think, again, movement of cash from a business into the digital ecosystem is something the fintechs can play a big role in terms of powering that. And again, there might be a logistics component to it as well. Changing gears to, I think you touched upon CBDC at the top of the discussion. I think it's clearly an area where there is a lot of curiosity in the room about what it is, and people have views from how it can transform economies to why do I need it because I already have UPI. We have launched a couple of pilots in wholesale as well as retail. Any early learnings, etc., that you would love to share with the group?
Yeah, CBDC has been talked about quite a bit in this event as well. My deputy governor was there yesterday to talk about that. We are still in the pilot stage. There are plenty of learnings to come by. Many more use cases can be looked at, tried. You would have seen that some discussions are there about the call money market. It itself could be one area where the CBDC could be tried. There are benefits of CBDCs. There are certain use cases that needs to be looked at in the pilot phase or in the pilot stage. For example, a mention was made about, say, programmability. Programmability is a very good feature. You would have seen some programmability features that were brought in when URUPI was one voucher that was introduced on the UPI. You could actually use it to a specific use case. Similarly, it is possible for CBDC to be programmed for a specific use case as well. And when we talk about CBDC, we have to understand that it gives us the comfort of physical currency plus a digital payment as well. And one of the comfort factors that anybody has when you use a physical currency is about the anonymity aspect. And people do actually, what do you call it, revere and regard anonymity when you do a payment. Especially if an youngster is there, you would not like his payment activities to be tracked by the payment. You may have some nice wallets, but still people prefer to be anonymous. And there are other use cases where you can be anonymous as well. That anonymity can be one feature that can be embedded in a CBDC. There are different ways in which definitely anonymity can be looked at. You need not have to capture a transaction, or even if you capture a transaction, you can delete. There are other ways of doing anonymity as well in a CBDC. So that could be one defining feature of a CBDC. Second could be a feature where I think even UPI is looking at contactless transactions and offline transactions. Similarly, here also we are interested in the pilots where we have this offline transaction that happen, especially when no connectivity is there, because we want to look at the issue of double spend. Double spend is one thing which is a very important aspect that needs to be taken care of in a CBDC context. If you see the way we have brought out our CBDC app, our experience, we are still giving the feel of somebody moving a currency note or getting a currency note. That's a very integral part of the experience, so that you feel that you are still in a digital world but still having the touch and feel of a currency. And I remember one of the general managers in the Bank for International Settlements, when he saw the app, said that everything is good except the smell of money. So that's what people associate with when they see a CBDC. But it's going to be a pilot which needs to transcend many areas, and definitely as was being talked, as is being looked at, is going to be very useful when you look at the cross-border concept. Of course, we have UPI. Probably people may feel that the need for CBDC in the Indian context may be lower, but you have to look at giving the bouquet of options to the users. So there can be both that coexist. There can be one that functions as a BCP to the other, just like I said about cash and payments. And you have interoperable QRs. I did see somewhere some mention about PBOC trying some interoperable QRs. We have interoperable QRs. The experience is going to be similar whether you use a CBDC or whether you are using a digital payment. So life is very interesting. I would be very happy for the pilot to be all comprehensive, to cover a little more areas, to cover a little more period. That's the experiment that's going on. So people have a tendency to expect that the pilots can give us solutions within a very short period of time. You know very well when you have your own internal teams that look into, you do spend a little bit extra time on the pilot itself. So the outcome is a very solid one. So we are also looking at that. Multiple stakeholders are coming in to participate. It will be very nice to see how you people look at the growth of digital wallets when CBDCs are going to come in. So what is that you are going to give importance? Even when we are going to plan the currency requirement for the next couple of years, how much do we look at as the physical requirement? How much do we look at as the CBDC component? How much do we look at as the digital payment related components? It's very interesting. So ultimately, one thing we want to do in the case of currency management is we cannot be really moving to a very close situation where money, when it is required, only will be given. We want to give the comfort that it will be available when you want. So that's where all these movements happen. Lots of other discussions happen. For example, just like India is being looked at as a leader in digital payments, let me also tell one thing in currency management. We manufacture our own ink. We have our own paper. So the currency printing, the currency manufacturing activity, etc., is all indigenous. And we also can export this printing technology to print any other currency notes as well. So challenges are there, but opportunities are also there. She has come in to say probably we are running short of time as well. I don't know.
Yeah, just a couple more minutes. I just want to see if this is such an exciting topic that if the audience has any questions for Mr. Vasudevan, I think there's a floating mic on the floor.
We have one person here.
Yeah. So, sir, now RBI has sorted out this problem of interoperability because you can use the same QR code, right? So, once you do a CBDC transaction, if it doesn't happen, a UPI transaction is triggered. Is that correct?
You scan the same QR code, but the activities of the backend are different actually. Whether the money is moving from your CBDC wallet or from a bank account, those transaction lines are different when you scan a QR code.
No, so my question is, once this is refined, why will we need UPI?
I thought you might ask why will you need CBDC, but you're asking why will you need UPI. Interesting.
Yeah, because CBDC is a store of value and a transaction, which UPI is not.
Yeah, I perfectly agree with you. UPI is a means for making your payments, and CBDC is a means of making the payment plus the store of value as well. But there are multiple use cases that are there in UPI as well. For example, if you see, this is one mode of making a payment and also gives you the comfort of handling currency. As I said, let the pilots come out. We will see what the UPI use cases are going to come out. There are features that are available in both that could be useful. We'll have to see. As I said, it's too early a stage to say that one will be required, the other may not be. We were not definitely in that stage. We are still, if you see, let me take some figures because I have those figures in hand. 15-16 financial year to 22-23 financial year. The Indian GDP rose twice. It has increased by 2x. The digital payment turnover has increased by 2.5x. And the currency in circulation has also increased by 2x. So there are those figures that are very interesting. You know, suddenly when you see the digital payment turnover increasing, we feel that everybody else probably may become second cousin or maybe not really required. But it is not true. We are not in that stage where we can say that we are cashless. If you see our vision document, we are still looking at less cash only. And less cash could be UPI, could be CBDC, could be physical cash as well. So that is how. And as long as you have these wedding seasons coming in, the lifafas and gift covers embedded with a 1 rupee coin, the coins will also be in demand. So I have just, India is something, a cultural shift has to happen, a generational shift has to happen, everything has to happen. But whatever is happening for good. Let's live in the moment and enjoy.
Okay, we have time for one more question. Usually the front benchers ask questions.
I know they are very serious, they want to ask questions. Please do, yeah.
Thank you very much, sir. This is more of an academic question. At the start, you had said that one of the principal tasks of the central bank is cash management. But the primary objective, if you look at it theoretically, is inflation targeting, right? I mean, that's a core objective of any central bank. Now, I just wonder, and when it comes to inflation targeting, setting the repo rate is always seen as the principal instrument. I wanted to understand what is the correlation or what significant role does cash management have from inflation targeting, because a lot of cash flushed in the market is what kind of props up inflation. So I just wanted to know the role and the correlation of cash management when it comes to inflation targeting.
Yeah, you know, like for every activity that you need to undertake, you need money. Money can be in the bank account, money can be in your pockets. You need to undertake those transactions for it to reflect whether the price that you pay is high, low, etc. So we look at inflation from that point of view, where the costs that are being paid, whether and the money that you earn by way of your interest on the deposit, how does those things all come in? So repo rate is something that looks at from a monetary policy targeting different perspectives. How is the inflation? How is the level of liquidity in the economy, all those things are being taken care of. And one of the components of that is definitely the money that is available with the public and the money that you deposit with the banks. See, if you look at the, it becomes a little technical. If you look at the notes in circulation, if you look at the currency that the banks keep in their branches, that's also a significant amount of liquidity that they need to handle a customer who walks in. Just like you keep cash for precautionary purposes at home, they also keep cash in their branches. So those things are all part of this liquidity management, availability of money for them when they need. And the currency that remains in the currency chest that the banks manage are typically the RBI money. It's not the bank's money. So when they need money, they draw from the currency chest and we adjust those things at the accounting level, whereby the bank is debited and all those things we do. But the liquidity, the amount of money available for people to spend, they are all with various tools that are available, and repo rate, inflation targeting, all these outcomes are all the purposes as well. It can be like critical functions of the central bank when you look at inflation targeting, when you look at the level of liquidity available, when you look at the reserve management, all those things are there. But money also needs to be available for people to spend. Just imagine the festive season, I said, we also will remain anxious as to see how much money will be demanded, how much money needs to be made available. And over a period, if you see, the composition of money is also changing. The smaller denomination notes are actually reducing in terms of availability because they are not in demand because UPI and other payment systems are taking over. But for the larger denominations probably are still in demand, so that needs to be made available. So it's a process that happens. So these are typical functions of central bank, and we also get busy with all these activities. Somewhere you can see the synergy that happens when you look at the economy that is functioning, when you see the GDP that is growing, when you see the inflation that is being monitored. So all those things have a function to play, have a role to play.
I know we can keep going on this topic for quite some time, but thank you very much for your time today. I want to just end with an analogy as you were speaking and particularly answering the last the question from the lady over there. It's you can have different formats, and yet us as humans and consumers like to enjoy each format for whatever it gives us. I mean, if I look at books, and when you use that smell of the note example, we started with physical books. Now books are available digitally. And at least at Amazon with Kindle, we have always thought that the next generation would never want to use physical books. I have a 10-year-old daughter who says, no, I still want to buy the physical book because I like the smell of the book, right? And same thing with video content. You have digital forms of content, yet people go to theaters and to shows. So I think there will be a need for currency in different forms, physical as well as digital. I think digital does bring a lot of simplicity, cost efficiencies, transparency, which I think is great on one hand. But it also has an issue of anonymity, which customers will think twice about. And then there are things between a CBDC and a UPI, things like interest income, etc., that still needs to be thought through. So I think there is a room for every technology and every innovation to solve certain needs, but then there is a need for the older technology to still be there and serve the existing needs. So I think on that note, I just want to, once again, thank you for your time and having this engaging talk with us.
Yeah, thank you, and thanks everyone. Always a pleasure to be here, as I said. If you were taking the example of a book, we try to keep certain memories, etc. in the books. And those things are missing when we have an Amazon Kindle. So typically, I would also be happy to keep that book. And I was just recently in Indore visiting a couple of temples. You always like to put physical cash in the Aarti plate, etc. Even the temple priest will be looking at you, what you are trying to do, etc. It's very difficult to convince him that I have done a digital payment, so please look at me differently. It doesn't work that way. Cash is always an important element there. So we will probably need some elements of cash for different purposes. Youngsters may not visit temples, I don't know. Youngsters may have digital darshan, divine darshans, but some others are there who may need. So we have to cater. Ultimately, our responsibility is to leave the choice with the users. And yesterday, again, one question was being raised about digital divide. I don't want anybody to say that there is a divide in the country because be it digital or be it physical, options are available. So we don't have to look at them with this lens. So I am also grateful for this session. Thank you very much and all the very best to each one of you.